Welcome everybody to today's show. It's the first video of many. We hope to cover any and all things Greater Boston real estate investing. Today's guest is Jon Bombaci from Candor Real Estate. He's the owner and team leader. We're going to, in today's conversation, we're going to talk a little bit about what Jon and his team see going on in the real estate market, how the coronavirus pandemic is impacting buyers and sellers alike, as well as investment strategy. So without further ado, welcome, Jon. It's good to have you on today, and I look forward to having the conversation.
Thanks, Todd. Happy to be here. Thanks for having me.
Absolutely.
Yeah, it's been a little bit crazy with the coronavirus impacting the market, but so far, we're adapting. If there's one thing that we've learned in real estate is to be adaptive to everything that's going on, and the whole industry in general has continued to adapt throughout this, just to make sure the lights stay on, and we'll be stronger for this when we get over it all.
Yeah. Jon, maybe first of all, you could start a little bit of background about yourself, about your team, and what you guys do.
Sure. So we're a small team out of North Shore. So we're out of the northern Massachusetts market. We focus on working with investors, and so our primary thing is working with people who are looking to house hack. We do a lot of things on BiggerPockets, a lot of the other real estate forums, and we host 2 to 3 monthly meetups, as well as some virtual meetups where we bring together a large group of investors to talk about the market and share everyone's perspective. Right now we've got 7 agents and an admin under me. I've been doing this full time for only about a year now, but we've been financially independent through real estate for about that time, and that was the time that I transitioned over into real estate full time.
Awesome.
My wife and I have 24 units right now, and we're in the process of acquiring another 70 over the next 6 months.
Oh, that's great. I think folks will have a lot to learn from you. So like you mentioned, so there's a lot going on in the market right now. Obviously, this is pretty unprecedented as far as what we're going through with coronavirus. Maybe we could start with just kind of macro, what you're seeing across the board, either nationally or statewide, but just kind of broadly speaking, what are you seeing across the real estate market?
Sure. So before getting into real estate, I was a financial advisor for about 10 years for corporate 100 companies. I'm very big in data. And so we've been tracking, listings. We've been tracking the number of properties coming on and going off the market since this has started. The other thing we've been tapping into the National Association of Real Estate Surveys. So they've been doing some flash surveys about the pandemic on a national level, and we've been monitoring that information since the start. So looking at some of the data, it's pretty apparent that we see a pretty big disconnect between what sellers are feeling and what buyers are feeling. And this is what we see with our clients as well. Sellers, I think it's like 88% of sellers on a national level think that their property is worth just as much today as it was, pre-COVID. I think 88% think the property is worth about the same or less than 5% price difference between what it was worth before all this. When on the reverse side, 47, almost 50% of buyers think that properties, should be cheaper. And, 15 to 20% of them think that it should be significantly cheaper, more than 15% cheaper. So basically there's this little bit of disconnect in the market where the sellers think their houses are still worth the same on a large scale. And the buyers think, hey, this should be an opportunity to buy something at a discount. What we're seeing is the buyers who are willing to pay what they were worth are the ones that are getting it. But the sellers are staying firm on their price, saying, hey, I think this is going to blow over. If I can't get my price today, I'll just pull it off the market for a couple of weeks and put it back on the market in June, and then I'll get my price then. So we're not really seeing, huge price decreases, and we're not really expecting that to come for the market because everyone's the sellers at least are all consistently saying my property is still worth what it was worth.
Yeah, it sounds like maybe folks are in denial a little bit, and sellers are kind of standing their ground, and buyers are thinking it's time to get a good deal potentially. So interesting.
Yeah. And what we see is like if you want to buy, if you're in the market to buy a house, now's a good time to get a house because competition is less.
Yeah.
But you're not going to get a huge discount on it. You might get favorable terms. You might get some closing credits. You might, be able to close an FHA or a VA loan with low down payments, but you're not going to get 15, 20% off the way, some people are expecting.
Right. And are you seeing this impact kind of the residential and commercial markets differently? And if so, maybe we can dive a little bit into each one of those markets.
Yeah, so the markets are, the data is split, strictly residential, strictly commercial. We end up operating in between. So we end up doing a lot of, multifamilies, 2 to 10 units, where it's a little bit, residential, a little bit commercial. But, when we look at the data strictly from a residential standpoint versus a commercial standpoint, there's a vast difference. Basically on the residential side, everyone kind of thinks that the decrease in rates, almost offsets some of the stuff we're seeing with Corona. On the commercial side, they're saying, both COVID and, the stock market correction adversely affect the commercial market. Yeah. So the commercial market's getting slammed a lot harder than the residential market, both from a lease standpoint and a purchase standpoint. I think it's like, I'm looking at the numbers now, but it's over 50% think that there's a significant decrease in the attractability of commercial, and then another 30% think there's a decrease, as opposed to on the residential side, most people thought it was about the same. On this side, almost 80% saying significant impact to both, from both the stock market and from the coronavirus.
Got it. And just for anybody watching later, so residential being kind of single family up to 4 units, and then commercial being multifamily as well as retail. Is that how the delineation is worked out?
It's tough to say. I mean, I almost think of it as residential is single families and condos. Commercial, they're talking about anything that you need a commercial loan. And then, the multifamilies, the 2 to the 4, tend to end up in no man's land.
Okay.
Just because it doesn't get accurately captured as either residential or commercial. Okay. I mean, 85% of the market is residential. The other 10% is commercial, and then you got 5% that's kind of that middle ground that no one really pays much attention to, and we have to go data mine that stuff ourselves.
Got it. That makes sense. And so this is publicly available data that we can link to in the show notes. Is that right?
Yeah, I'll send you it. It was last updated, April. When was it? It was last updated April 5th. From the National Association of Realtors. So now, we're, about 10 days later, looking at it, going through it. We did review this a couple of times since it's come out. And, we don't really think that there's been any change in the market over the last 10 days because, the lack of inventory across the board has kept the market pretty stable.
Right. So things are evolving quickly, but there seems to have been some stabilization as far as inventory goes, sounds like.
Yeah, most of the evolution on our end has been around technology, the way people view houses, the way people go out and look at them. People who on the residential side, they're saying 25% are willing to put in an offer sight unseen just based off video tours and things like that, which is something that we weren't seeing before. On the commercial side, that doesn't happen. And so that's also one of the reasons why the commercial side is being heavily impacted, because the clients are heavily impacted from a small business standpoint. But also, large scale investors aren't going to buy a building without going through it. And with all the restrictions out there, it's harder to get into those buildings.
Got it. So maybe we can, so for those selling, and it sounds like more on the residential side. So maybe we can talk a little bit about some of those adaptations. So for folks that still are staying on the market, and for folks that still are, trying to sell their property and maybe don't have the luxury to wait, what are some of those adaptations you're seeing when it comes to marketing, technology, and how are we having to get creative to sell these properties and close deals?
I mean, a lot of it comes down to the RMLS in Massachusetts has strongly advised against doing open houses unless absolutely necessary. And so the way it's been working is, virtual open houses, virtual showings, and then by appointment private showings.
Got it.
The agents are supposed to show up beforehand, open up the house, sanitize the doors, put on gloves, put on all those things. Make sure you can walk to the house without touching a doorknob. And a lot of agents are actually going in, opening the house and meeting buyers on the front lawn saying the house is open. When you're done, come out here and we'll talk. So it's been, more like that. The agents are facilitating people getting into the house, but you lose the aspect of, hey, look at this water heater. Hey, look at this basement. Hey, look at this, because the agents aren't actually accompanying people on the tours. It's a lot more self-service. Either, check it out virtually or, I'll get you into the house safely, but that may or may not be with me.
Got Got it. And then on the buyer side, are you seeing, so you're seeing folks that are willing to do virtual walkthroughs and maybe see the house in a different way and still willing to put offers in and close transactions?
Not on the commercial side, not on the multifamily side. Where we see it is we're seeing it on, luxury condos where, it is what it is. Like you can expect a certain level of finish from a luxury condo or new construction. But, in Massachusetts, we have a lot of houses from, early 1900s, late 1800s. I think, if you're going to spend $500,000 on a house that was built 100 years ago, you're probably not going to feel comfortable doing so without getting into it. One of the things that we're kind of saying is, if you like the virtual tour, if you like everything about it, let's put it under contract with an inspection contingency, and then we'll get you in there during the inspection. That gives us time to set it all up. That gives us time to go in there safely with a home inspector who are still open and operating. But it does make it so, deals are more likely to fall apart after inspection because you don't realize something about the house that you missed during the virtual tour.
That makes sense. But I imagine with the lower inventory and the lower number of buyers out there, it's, that may be a risk that some sellers are willing to take on, it sounds like.
Yeah, and actually a lot of the questions we're getting from sellers after we submit offers is, what does this person do for work?
Right.
They're worried about the construction workers. They're worried about, the teachers in terms of when they can get back to work. They're much more likely to sell to someone who's, in the medical field or in one of those, business essential finance type of roles where their job is a little bit more secure than, someone who might have had a very good service job. But who knows when that industry is going to be, alive and well again.
That makes sense. And then maybe switching gears a little bit. So something that impacts both buyers and sellers, right, is the impacts to lending. So you talked a little bit about FHA and VA loans, maybe on the residential side, and then you talked about some commercial lending. So can we dig a little bit deeper into how we're seeing the lending markets being impacted, and what types of loans are working, what types of, not necessarily from like we don't have to go super deep on this, but just like macro, what are you seeing for different types of loan products, and how are you seeing the lending footprint change a little bit?
So overall, we're just seeing everyone being a little bit more conservative. So, in February, I could have gotten someone with a 580 credit score approved for a loan. Now, that's a 640. On the commercial side, I could have gotten a 20% down commercial loan at, 4.25 with a 10-year fixed. Now it's, 30% down, 5/1 ARM with higher interest rates. Yeah. So the banks are just being more restrictive. The other thing that's changing is, reserve requirements. Before, you could buy a single family or a 2-family with no reserve requirements. A 3-family with 3 months, a 4-family with 6 months. Now they're looking for, 6 months of reserve requirements across the board. And on the commercial side, they're looking for a very hefty cash balance to make sure that you're going to be able to support the loan afterwards. One of the biggest things that's happening in the market is everybody and their mother is taking those those mortgage payment deferments that are being, advertised on the news and people are always talking about, where if you have a federally backed loan, you can defer your mortgage for 90 days. The problem is everyone's trying to do it, and not everyone has a federally backed loan, which turns into a very tricky conversation with the lenders. Or if it's a privately funded loan, they're feeling like they need to come up with something, but it's not 100% guarantee. So you get people that are in a tight spot where they think they can defer, but they can't because they got it through a credit union who's not offering that program. And now they're adverse compared to the people who got the federally backed programs.
That makes sense. And then as far as, before all this, it was, at least in the Boston area, an incredibly competitive marketplace where, maybe, you tell me, but it seemed like it was difficult to get an FHA loan or an FHA backed loan or offer accepted, because you were losing out to these, other conventional loans. Are you seeing a change in that? You're seeing people be able to get offers accepted with FHA or other government subsidized loans?
So yeah, so with a decrease in competition, we've seen, terms, meaning, weaker loan products than, all cash would be the toughest We've seen the ability to get those accepted. The issue we've been having is just finding good properties.
Yeah.
So, inventory is extremely down. A lot of the sellers have, removed their houses from the market. A lot of sellers aren't listing new houses. And so when a new house comes on that is good for, low down payment programs, first time home buyer type homes, if they're priced appropriately, they'll go in a matter of days.
Sure.
And the biggest difference is, before this, what would happen is, and we were out looking at properties together at some point, but we'd go see a property on Wednesday, ask, hey, if we put an offer in on Thursday, full asking, above asking, no contingencies, would you accept it? And they say offers are due on Monday. And then we're going to go back and we're going to ask for, best and final. And then we're going to go back and we're going to squeeze the top three one more time.
Yeah.
Right now, what we're seeing is, if we say on Wednesday, hey, if we give you an over asking or a full price offer tomorrow, would you accept it? They say absolutely. And so the biggest difference is, the sellers, don't feel as confident about the market. The agents don't feel as confident about their ability to bring in multiple offers. Yeah. And so they're much more likely to take the offer in hand as opposed to wait for the better one, which, a couple months ago, they got an offer on Thursday, they were pretty much guaranteeing themselves 5 more offers by the end of the weekend.
Yeah, that makes sense. So everything from inventory to buyers to lending, everything's just tightened up quite a bit. And when a good deal is there, or when a deal is there, people are closing or are willing to accept it quickly, it sounds like, which is great. I don't want to take up too much of your time. I know we have a third guest on, and the little one.
Yeah, she just woke up and she's a little whiny, so I apologize.
Yeah, no, it's these work from home days. We've got the 2 upstairs, so totally get it. But maybe we can, I'm sure we'll be back on again. We'll be doing more of these videos. Try to get a couple out a week. So maybe we can just kind of we'll wrap today's session up. Maybe one recommendation, John. What would you deal with a lot of investors, as you mentioned, whether it's specializing in house hacking or buy and hold rentals. What's one recommendation you would make to a newer investor going through this pandemic and this situation? What's one recommendation that somebody should be doing right now?
I always advise this to all new investors or all investors, but it's particularly important now where it's, rely on the numbers. Do your math before you see the property. If the math works, it doesn't matter if it's a good time to buy or a bad time to buy. If you're going to make money off the deal, you're going to have positive cash flow. If you're going to hold the property for the next 30 years, it doesn't matter if the market goes down 10% or up 10%. I strongly think the market's going to rebound quickly. There's not a lot of inventory out there. The market stays strong through all this, and I think we're going to have a heck of a summer on our hands. And some people are worried about what if the market goes down 10%? And my argument is, well, if you ran the numbers and you're going to be making $1,000 a month, it doesn't matter if the value of the house goes down 10% in the next year if you're going to hold it for the next 30. You're still going to be making $1,000 a month, over the short term, and that's going to go up over time. So in this particular time of uncertainty, you're not buying for appreciation. You're buying based on what the property is. And if the property makes sense now, I still think people should buy it. But normally we've been really big advocates recently with everything going on. We don't want to do too many showings. It's, if you want to see the house, do the math, send me your math. We'll talk about it. And if the property makes sense and meets your goals, that's when we go and we set up the showings. Versus before, we would say, all right, find me one house that you want to go see, run the math on it, and then we'll find 2 or 3 more houses in the area and we'll go see all 4 of them at the same time. We're not doing that anymore because we have to be a lot more restrictive in terms of our interactions with people. But if the math makes sense, the property's still worth buying. And that being said, we've got 70 units that we're closing on over the next 6 months. We've got 23 units that we're buying hopefully tomorrow. And we're completely fine buying them, even though the market's a little bit uncertain, because we know the math and we know, if we have to hold them, we're going to be fine, even if the market goes up or down 20% in the short term.
Got it. It's a great recommendation. Thank you. And then for folks that want to get in touch with you or follow you, what's the best way to do that? Where can they find you?
You can find me on Facebook, Jon Bombaci. We also have the website, CandorRealty.com. And, I'm also an active participant on BiggerPockets, which is where I think you found me originally.
I
So,
did.
we're always posting out there. Maybe we can link something somewhere down in the show notes. But if anyone has any questions, you can reach me at any of those places. And we hope to be online more and more as we can't be offline as much.
Yeah, and you've hosted, the virtual meetups. I know we're running the physical meetups, but the virtual meetups have been great with great turnout. So we'll make sure to highlight those as well for folks that want to join into weekly active discussions. So
It's called Clients and Properties. We actually just created a new Facebook page for it. So we'll send that information along as well.
Awesome. Well, thanks again for joining, John. It was really good to talk to you, and have a great day.
Yeah, thanks for having us, Todd. And yeah, looking forward to seeing how this all comes out.
All right. See ya.
Bye.
Bye.